Hello and welcome to this week's Market Outlook webinar. I'm David Jones, and this is one that we do every week on a Wednesday lunchtime. And it's a sort of half-hour look at the major markets, what's going on, what's moving, what are the big levels to watch, and what are the trends. And I think there are some interesting levels that are being tested now, and that could be tested in the days ahead. So we're going to pick up on a few of those. I'll just put up the risk warning sort of while we're doing the introduction. I do these in conjunction with Aondo every Wednesday, and then twice a month we do a webinar on social trading as well, and that's normally held at 7:30 on a Tuesday evening. All of these get recorded, so if you're watching the recording, it was held live on Wednesday the 26th of October at 12:30 in the afternoon, and if you register for these and you can't make it, you should always be sent a link to the recording. But let's get into it, and let's just see what's happening. I'm just going to flip over. I thought this week we'd start with the euro against the dollar. I did a one-off webinar last night on what to watch sort of immediately after the US election, and we were talking about if Clinton wins, what's likely to happen. If Trump wins, which way is it going to go? And one of the things we talked about is clearly what it means for the currency, for the US dollar. And you'd think, a Clinton win should be positive for the dollar, and a Trump win, you think, would maybe see some nerves for the dollar. But I just wonder whether, considering the moves we've seen in recent weeks, whether the dollar's gone far enough anyway. But just take a look at this. This is one I looked at last night, and I thought it would be a good idea. We'll have a look at the short term in a minute, but just to remind ourselves of the big picture view on euro dollar. It spent much of 2014 in decline, and clearly, what we're seeing here, this is euro weakness. So the euro goes from being worth about 140 in the sort of summer of 2014, and trades as low as 105 by the beginning of last year, sort of March 2015. So that's a sizable drop. That's what, a 25% drop, near enough, in the value of the euro against the dollar. And then it spent what feels like much of last year almost building a base. I think these are weekly candles that I'm looking at here, so slightly longer term candles. But I think it's been interesting, the move we've seen this month. Let me just take it out to maybe a daily. So let's just have a look in a bit more detail, because it did start rallying last night when I was doing this. But I'm just thinking, considering where the euro has come to, and if we just sort of highlight some of these levels from last year, because it did feel like last year the euro was, building something of a base. So we've got lots of supports. The low from last year, 104.60, then 105.50. Then, if we zoom in, we've got the sort of the little recovery levels that were set on the way up this year. So there's levels coming in ahead of 107, and then we take it up again to sort of these sort of spikier lows from sort of February, March, and with the first level coming in ahead of 108, I do just wonder, well, maybe the move in euro dollar has been something overdone, because just this month, the euro has slid. You can see it's been a pretty vicious slide. Since the beginning of October, we've gone from 112 to I think briefly below 109 yesterday. So we've seen a 300 point plus slide in the last 2 or 3 weeks or so. So I think the euro's an interesting one to watch, because we're coming back to, it's the stuff that I talk about every week, the big levels in the market where we've seen sentiment change, and this whole 107, 108 band, I think, is a really important one for the euro. So let's look at maybe the trading opportunity here. Again, I think it's maybe a bit too early to start sort of, loading up on euro dollar, because this has been the trend going back over the last 4 weeks or so, and it's pretty clear to see which way that trend has been. And it was only yesterday that euro dollar made a new low for this downtrend. So yesterday lunchtime, we saw a new low. But so I'd say, from a purist point of view, you'd have to say the trend is still down. So ideally, we should be looking for opportunities to get short. Maybe one short is to be short now, short 109.14, whatever it is, with a stop loss above these early highs, just assuming that's a spike in the price and back down we go again. That's not a ridiculous strategy, but I would just be keeping an eye on that longer term time frame for euro dollar, because I think if we're going to see the euro start to turn around, we're probably getting back to levels where it looks like it could be happening. So I'd be, as I say, even though we've got to trade with the trend, I'd be in no immediate rush maybe to be a buyer of euro dollar, but I'm going to cheat now and just draw my trend line through that spike, which is not very textbook. But maybe the weakness has been somewhat overdone. Let's see what happens. But I think euro dollar is an interesting one to keep an eye on. I think in the days ahead, particularly if it starts to sell off back towards yesterday's low. Let's see how it reacts if it gets back to sort of the 108.50 level. But I think it is important to keep an eye on these extra time frames, and just considering where we are on the daily charts, I think euro dollar is an interesting one. Another interesting one is, we don't normally look at this, but I thought we'd look at it today. So the dollar against the Swiss franc. Have I got it on my watch list, or have I got it there? Hang on a second. Because this is another one that at the moment, let me just see if I've got it on my list. Let's just bring this up. Because dollar Swiss franc, it's back up to a level that had been a real problem on quite a few occasions. Oh, hang on, why is that not loading? Okay, we'll come back to that in a second. But basically, dollar Swiss franc yesterday, it moved up to what was it? 1, where $1 was worth 1 Swiss franc, and it started to look like it could be a problem. And so again, there's another argument there that maybe the strength we've seen in the US dollar recently is maybe coming to an end. But let's have a look at another old favourite, pound against the dollar. We had this other sort of crazy mini flash crash just yesterday. It happened. You lose track these days with what's going on with the pound. There we go. So that big move. I think he was ahead of the governor of the Bank of England, Mark Carney, due to make his speech. But it fell from 122.10 briefly below 121. And for me, it's for pound against the dollar, it's still the same old story. I think you'd be very wary about trying to pick a bottom pound US dollar at the moment. Still have the same sort of view. Let's be looking maybe to sell rallies rather than looking to try and be Johnny Smartpants and pick the bottom, because you can see what a problem this 123 level has been since we had the proper flash crash a couple of weeks ago. Rallies back up, runs out of steam about 123, sells off a week ago. We're banging up again at 123, drifts off, and then falls off a cliff yesterday. So clearly, it's still a very nervous market when it comes to the pound. What's an interesting thing to watch tomorrow? I think we've got tomorrow morning 9:30 UK GDP. I think it's the latest quarter's preliminary gross domestic product figures. So we'll see how well or not the UK economy is doing. So we could well see, you'd expect some pound volatility off the back of that. So for me, I must admit, I've not traded it for weeks, the pound, because some of these crazy moves. But I think the level to watch is 123, and I think because it has been, so bearish, so negative, we see all the rallies getting sold. I think if we saw it push above 123.30, I think was where the level's coming in, we could well see almost quite a bit of short covering maybe, and maybe quite a sharp push higher if and when we see 123 and a bit get broken. So for me, that's the key one to watch. But you can see that by the moves that we've just seen over the last couple of weeks, how nervous this market is, pound against the dollar. So I would not be, if I was long, I wouldn't be staying long for very long, I think, unless we see this 123 level get broken. So let's see what the next few days and weeks brings, particularly off those numbers tomorrow, off those GDP numbers. Okay, dollar Canada. This is one I picked up on last week, and this is unfortunate. I think I was talking about this last week when I was saying that dollar Canada was banging up. This is the dollar Canadian dollar, banging up against what had been a big level. So if I go back to, was it about the 133 level we were talking about, weren't we? It was that sort of level where we'd seen this massive downtrend the first part of the year, and dollar Canada, when it moves, it does have a tendency to really move. If you look back over the last couple of years, before that move down, we saw, there we go, there's our, that was the move, so 2013, 2014, and most of 2015 as well. So, and then we'd experienced this sell-off this year, and I was mentioning it, I think I've mentioned it a couple of times, because we've seen it banging up against 133. And I did a trade last week. I think I was talking about it last week on the webinar. Did a trade. I think it dipped back, and I was buying it. I was buying it because, let's see if I can just get this level in, the level I was looking at. So I think it is, yeah, I must have bought about here, 30.90. That's where I bought. So I was buying here, and I had my stop loss just below here, just below 130.50 level. And very inconsiderately, the next day, so I was looking for a rally back up to here, very inconsiderately, as sometimes happens, I think the Bank of Canada came out and did something with rates, but it was their, as is often the case, their press conference afterwards that sent the market a bit loopy. So it spiked off really sharply, picked off my stop, and I thought, okay, well, let's see, I'll see if I get a chance to buy back in again. And then promptly reversed and went up like a rocket in the direction I thought it was going to go all along, but without really a chance for me to get on. So here you can see the move. It's what, a 100-point move in an hour, and then 100 points back up again. So I think, now and again it's going to happen. And I think it's one of these reasons that people will use for not using stop losses. They'll say, well, if I just think if you hadn't had a stop loss there, you'd be in it now. You'd have made 250 points over the last week, which is true. But I think, in my experiences, stop losses save you enough of the time that occasionally, when you get a rogue move like that, it's a price worth paying for missing out on the opportunity. But I think it is interesting, because now it is above this 133 mark, so I'd be, even more keen now to be a buyer on dips of the dollar against the Canadian dollar. Let's see what happens. But if you look at some levels, so I mean, it's a bit messy, to be honest, the last couple of days. But I suppose if you really wanted to be an aggressive buyer, a stop below this spiky low from a couple of days ago was probably the one to watch. But maybe it needs to unwind itself a bit. But regardless, sticking with that bigger time frame, the fact that it looks to have finally conquered this sort of 133 odd level is a positive sign. So I think we could well see a much more extended recovery, I think, for the dollar against the Canadian dollar. I think that's it maybe for currencies. Everything else is pretty much as it was a week ago. We look at dollar yen quite regularly. That's still doing the same old thing. Dollar yen. We're still whenever it sort of drifts down to 100, we see the buyers come back in. It stages really strong recoveries, but it's back up to an area where it's struggling again now. And if you looked at maybe the longer term view on dollar yen, I think there's still the argument for that trend to still be, depending on where you draw it from, as usual. I don't think it makes much sense drawing it from there. But if you draw it from these sort of levels, I think the question is whether, that's not a particularly well drawn trend line, is whether dollar yen is breaking the trend or whether it's just having a bit of a pause before it legs its way lower. And I think the levels to watch, 108 on the upside. I think if we saw dollar yen through 108, again, it starts to get quite bullish about that. But at the moment, I think we're still stuck in what is a very tradable range, but it's still something of a trading range. So back down to 100, want to be a buyer. Back up here, this sort of area, want to be a seller. And I think we need to see a break either above the July highs or below these lows for the next sort of major trend on dollar yen. So I think the next couple of days, euro dollar is one to watch for me. It's one I'll be keeping an eye on, just to see how the hourly charts perform. How it gets on, following the fact that on the dailies we're getting near levels that had been important earlier this year. Are we going to see a turnaround? And if it does drift back towards the lows from yesterday, do we see a bounce? Let's take a look at stock markets. I think US stock markets is an interesting one to watch this afternoon. This is one I'm going to be keeping an eye on. I do trade the S&P quite a bit. So the S&P 500 is the broader US stock market index. So we have the Dow, which is the one that everyone's familiar with, but the Dow is only 30 shares, whereas the S&P 500, I'm sure you know, is 500 shares. So it's a much broader cross-section of the market, and it's been a bit odd lately. We pushed out. We had the crazy moves on the EU referendum, stock market sell-off, then stock markets rally. US markets, the S&P 500 pushed out to fresh all-time highs during the summer, and then went nowhere. Just traded in this relatively tight range for much of the summer. Fell off a cliff middle of September. We saw fairly sharp falls, and then since then has done the same thing again. Has been trading in this particularly tight range. So for me, if you were maybe a disinterested observer of US stock markets, some levels to watch. Clearly the lows, those sell-off lows ahead of the sort of 2100 mark on the S&P, and you can see it came back down to it in the second week of October, and the market has recovered, but it's well capped, sort of ahead of the 2180 sort of area. But what I think is interesting is based on the hourly charts, and I look at sort of daily charts to get an idea for the bigger picture, and the hourlies for, well, are there any interesting trends going on over a few days, and then maybe the 10 minutes if I'm really bored and I want to lose some money. But I think if you look at the S&P, and you see a similar picture in the Dow and the FTSE as well. We'll take a look at the FTSE in a sec. But we have had something of a choppy period of trading, but you could argue since the 13th of October we've had this uptrend with the market push to a high, come back but make a higher low than before, then push actually nowhere, but earlier this week push out to new highs, push out to new highs again, and then sell off. So if we're assuming, and I am at the moment assuming this is a trend, then the sell-off that we've had yesterday and overnight, we've seen a reasonably sharp sell-off overnight because it's a 24-hour market and we've still got nearly a couple of hours until it opens officially. But then this is a buying opportunity. So this is the move we're seeing is sort of that trend there. Now, even though it's lost the trend line, I think for those of you who've maybe been on a few of these webinars, I don't think losing the trend line is the be-all and end-all. For me, the most important thing is, does it hold on? Does it not break the previous low, the previous major low? So for me, the previous major low in the S&P is down here. I think it's 29.5, and we're currently trading at 21.36 is where the S&P is. So I think it's going to be an interesting one this afternoon, where we've seen over the last couple of hours the market has started to turn around. But basically, it's very simple. If the market's going to rally from anywhere, then this is the place. So if we're going to hang on to this trend, so it's really going to be quite a pivotal area. I think this afternoon. So we'll see how it performs. How we get on this afternoon, and whether the market can actually hang on to these levels down here. If we flip it over and have a look at maybe the 10-minute chart. Here we go. You can see we have seen something of a sharp turnaround. It closed yesterday about 21.40, I think. But maybe we'll get another opportunity to buy in this afternoon. But I think that's really an important one to watch this afternoon to see how the market performs. Let's just chuck an oscillator on here. I'm not a massive fan of these, but I do look occasionally at the relative strength index, like a 10-period relative strength, and I think I've been watching it the last couple of days, and I think it is a market, as you can see, that's got oversold. So we moved oversold yesterday. That was the signal that didn't work very well, and it's got even more oversold. So again, that does help build the argument that maybe this weakness is going to run out of steam. And it's not done a terrible job, this RSI. Back there it was oversold. But again, you can see it went quite oversold for a while before the market turned. So that's why I don't think you should use these oversold indicators, overbought, oversold, blindly, but use them in conjunction with something else. But I do think these lows from the 21st of October, they're going to be the important ones to watch this afternoon over the next couple of days. So for me, assuming it holds, it looks like there's a buying opportunity stacking up in the US indices. Let's look at this is the Dow now. Same thing, really. Of course, it's the same. Sorry, the same overall pattern. If we chucked our trend line in there we go. Oh, the Dow, that's perfect. That's a perfect textbook example so far. So the Dow is actually hanging on to its trend. The levels to watch in the Dow, again, the 21st of October lows, around about, and it's pre-market. Is it pre-market or maybe the first hour of trading on the 21st of October, around about the 18,050 mark. So I think it's in for an interesting afternoon. You know, it's been an odd week a little bit for the US stock markets. Monday saw a sort of gap higher, but then just declined for most of the day. Yesterday was really a waiting game, waiting for those results from Apple. The markets, just the last sort of 4 hours of the day, went absolutely nowhere. So it'll be interesting to see how things perform today. But I think these trends are the ones to watch. And a quick one on the FTSE. I put it on Twitter earlier, but the FTSE, similar sort of thing. Maybe not. It's not quite as clean cut as the US markets, but you can see how important these lows over the last couple of days have been. There we go. The last couple of weeks, sorry. So it's the 69. Was it 69.30? I think I put a tweet saying how 69.20 had helped support the market. So once again, it's sort of bounce or bust time for the FTSE from here. And with it trading at wherever it is, 69.48 at the moment, you know, you could build the argument for the market to run back up above 7,000, 7,050. You can see 7,060 has been a problem this week, but it's a really, really big level. And of course, if we do see this level break, you know, you'd expect something of a sell-off. It's this level here. We can see it here. Let's see what happens. So there's some key ones, I think, to keep an eye on when it comes to stock markets. So they're, I think, quite immediate ones for me anyway. And now let's have a look at some of the commodities, because they're always interesting. I think I've got a bit of a problem with crude oil loading on my chart, but in the best traditions of Blue Peter, here's one I prepared earlier. So this is a longer term chart of crude oil, and I think it's been quite frustrating. You know, we were talking about this last week, and you know, we saw the big sell-off in oil the first couple of months of this year, where it hit $25, $26 a barrel. Then we saw a correspondingly strong bounce back up to these levels here from when's that? June, up towards the 52 mark. And I think this time last week we probably would have been here. I'm assuming, yeah. And I was saying, well, if there's a place to go short, this is the place, you know, with a stop somewhere above 52. But if the market makes a move for 52, it does suggest the next legs higher could well be underway. But we've had a really scrappy move. You know, I think it gets really messy when we see things like this happen, and it can't be avoided. I think it's all part and parcel of trading, where the market has spiked through that 52 level, but has promptly reversed and dropped back about $3. So I think it's, as usual, it's a tricky one to call, I think, oil. But let's take a look at maybe on the hourlies and see if we can pick out some levels that we might want to sort of keep an eye on. There we go. That's the last. What's that? The last couple of weeks or so. So there's the move on oil, 52.20. I suppose if you did go short with a stop above 52, as long as it was higher than 52.20, you'd still be in the trades. You know, but I think at the moment it still looks weak. You know, just as we're talking now in the current hour, it's made a new low for this down move. So I think sort of still feel that trend for oil. Let's just plonk a quick trend line on here in MS Paint. Will that work? There we go. So you could argue the trend off those lows, those August lows, is still there. So I think we will see another move back above 50 in oil, and maybe that's the move where we see the proper breakout. But for now, I wouldn't be in a hurry to do too much, because, you know, clearly the trend over the last week, it's a market that's lost $3 over the last week, and looking at what it's doing now, right at the edge here, it's nudging to fresh lows. So for me, medium term, I think it's going to push back up to 52, while that trend still holds. But in the short term, I'd be sort of sitting on the sidelines. I do think it's a bit of a swine of a market, oil, I think, in terms of volatility. So it's not one that I trade that often, but clearly I think it's always an interesting and important one to watch. And the last one, the one we'll finish up on, is gold. I mentioned this webinar I did last week. I'll send out a link actually to the recording after this one's done. That I did last night on the whole Trump v Clinton thing. And I think gold is maybe the interesting market over the US election, because if we looked at it theoretically, if Hillary Clinton gets in, as the polls are suggesting, you'd expect the price of gold to go down, because investors should, in theory, be happy to embrace risk and avoid stuff like gold, because the favourite to win the election has got in. There's been no surprises. Whereas if Donald Trump gets in, some investors might think, right, I want to shove my money somewhere safe for a bit, and that pushes up the price of gold. But I think, because of some of the moves we've seen in gold this year, I do think the bias for gold is still up, and just to sort of remind ourselves where we are and where we've been, we had all those years in the 2000s where the price of gold was just rallying year in, year out, from $220 an ounce at the turn of the century to just shy of $2,000 an ounce in 2011. And then for years we'd had gold sliding, but I think the moves, it continues that move that we've seen this year, where I think it does look as if we've broken maybe the back of a couple of these downtrends. Let me see if I can plonk some lines on. Maybe something like that. The rally this year has broken the back of that downtrend. It's managed to take out this sort of high from January 15, and you can see, previous rallies in gold, they've not really troubled previous major highs, but the move we've seen this year definitely have. We've broken some big levels. It has, if we change it over to the dailies, it has lost that 1300 level. I did a few trades off that during the summer that I'd mentioned on the webinar, so it had lost that 1300 level. But for me, as with, I think when we're looking at the S&P, there's a shorter trend on the S&P, even though you could say, well, the trend in gold, it's definitely run out of steam, because it hasn't really broken any of these previous major lows. Okay, it dibbled around that one a little bit, so I'm going to bend my rules a little bit for that. But there's all these other major lows. I think the bias for gold is still up. So for me, I think, as I've been saying for a while, I'd still be in favour of buying on the dips for gold, and I still think we'll see it maybe having another go at those highs in the 1370 area, in sort of the weeks and maybe the months ahead. But I think it'd be interesting to see how it performs over the US election. But I think the argument for gold, still bullish, still positive. We had this sharp move lower, chopped around a bit, but it does seem to be sort of picking up a bit of momentum, and maybe we're going to see it climb back up above the 1300s. So I think that's it. I think so. Just to recap, the immediate ones to watch for me this afternoon. Actually, we'll have a quick look at Apple. Let's do a quick look at Apple before we finish. But immediate ones to watch this afternoon are the stock markets, particularly the US markets, because on the S&P and the Dow, we're back to levels that had proved to sort of support the market over the last couple of weeks or so. So let's see how that performs. Slightly more longer term view is euro dollar, because even though it's been weak, it's back to what had been pretty significant levels from earlier this year. So it's difficult to build, difficult for me anyway, to build like a really negative argument from the euro in the sort of the weeks to come. Let's see what happens. But I think the immediate one for me is US stock markets this afternoon. Let's just have a quick look at Apple, because Apple was interesting last night. I think there was almost I think I'm having a few problems with my search at the moment. It was almost as if the market was marking time yesterday. Let me bring up a browser actually, because I think I've managed to click something and freeze it. It was almost as if the market yesterday was marking time ahead of these results, the Apple results, and it came in for 3 quarters on the trot. Apple has seen falling sales of its iPhone, and its revenues were down, I think about 9% or something, weren't they, or something like that. But it was actually better than the market was expecting. So the market had a fairly downbeat view of it, but the Apple numbers came up better than expected. So I'll just flip over. This is a third-party application I use from a company called ShareScope, who you might be familiar with. They're very good for stock market stuff. Let me just flip this over and show you. So let me go to the other screen and make sure you can see that. Yes, okay. So that's this is the Apple share price. Let's just take that out. And of course, stock markets are always looking ahead. And the Apple price had been in decline for the second half of last year. It's come from sort of $135 a share, as low as $90 a share in May this year. But you can see, clearly what the trend in the Apple price has been over the last 3 months or so. And I think it ended up yesterday in the after hours market. I think it finished down about 2% on the day. But I think it will be interesting to see how it performs today. Now we've got that bad news out of the way, and it was really no great surprise. I think if it starts to push higher and pushes out through $119 a share, it could be a suggestion that maybe the next leg higher is underway. So I think it's really interesting because anyway, going into those results this month, Apple had already hit fresh 2016 highs. 120 is maybe a bit of a barrier for Apple. Let's see what happens up there. But it was already, pretty bullish. It was on the highs for the year so far. So I think it'd be interesting to see how it performs. The fact it was off a couple of percent is nothing. So for me, the trend for Apple is still intact. And it'd be maybe one to watch on the open today, but definitely one if you're interested in trading individual shares, maybe definitely one to keep an eye on anyway, to see if that trend continues to hold. But I think it'd be, let's see how it performs today now those results are out of the way. But that's it. I think we'll wrap things up. I'll just put up the screen with my contact details. There we go. Hang on. So we'll do this all again next week, though next Wednesday at 12:30. I'll send you a link to the webinar last night where we were talking about the US election, a slightly longer term view of stock markets, currencies, and gold as well. But if you have any questions, feel free, drop me an email. My email address is david@tradeafter.com. I'm doing some stuff with Aondo because of their social trading. So today we're talking about self-directed trading, but I also do some stuff for them on their social copy trading product, which I think is very good and very straightforward. And I've written some stuff on that on my website, tradeafter.com. And then, of course, finally, there's Twitter. So it's @JonesTheMarkets on Twitter for sort of half interesting charts during the day. But it's 2 minutes past 1, so just slightly over. So we'll wrap things up there. Do it all again next week. But up until then, I hope you have a good week, and thanks for coming along.